Right. Hey, good morning to all of you from SUA. It's a pleasure to be with you. My name is Jeorge Holmes, and Joy Daly is going to be partnering with me, and we're going to be kind of tag teaming some of the information that specific here focused on long-term care, but there's a couple of subjects we're going to also be focusing on. And we're coming from an organization that's a national organization. It's called American Senior Benefits. You've got a folder in front of you there and some vital information about us in that packet. And so we're going to have a bit of a presentation and also be able to have some Q&A and be able to connect with some of the questions you may have and to the best of our ability answer them. And somewhat it may not be as thorough in a setting like this, but at least we'll do our best to make that happen. American Senior Benefits is a large brokerage. And so if you can imagine about 200 of the top A+ to B+ rated carriers offering services and products to specific individuals would just tell you that we can really shop for clients and that we are not in a sense captive to a specific carrier, but we can offer a lot of different offerings to make sure we fit the client's needs. And those 2,000 agencies are across the United States. We are in Illinois, and we're under a brand kind of like American Senior Benefits allows agencies to be able to have their own branding, but still have the umbrella and protection of the larger organization. And so Key Retirement Solutions is what we call ourselves, and we're in the state of Illinois and also about 7 or 8 different states with representatives that would be brokers. Licensed agents to do specific things that may be Medicare related, long-term care, retirement planning, fiduciaries, life insurance, all of the things that at times would call us a one-stop shop, and very, very helpful for individuals. So the value of American Senior Benefits is the partnership with SUA. And SUA has made the decision and said, we love what American Senior Benefits is doing. We appreciate how they respect individuals and clients and seek to educate as best as we can and allow a client to be informed of whatever decision may be made that's their decision, and then we help them make sure they're positioned in the best way to accomplish their goals. And in this setting, long-term care tends to be a part of the package within the framework of moving into the season of retirement, which would include Medicare, life insurance still, long-term care, and other products and services that we provide, managed money, portfolios, and working with fiduciaries and helping people, making sure that they're positioned in the best way for not only their life, but also at times there's legacy plans and what that looks like. And so I wanted to throw up this slide just briefly here to give kind of 4 pillars that help you understand what American Senior Benefits brings to the table. We're not going to cover all of these, so don't get nervous about it. But life insurance, we'll connect a little bit on that. Many times we do reviews for people, say with the SUA members. You may have life insurance as an employee, and then you may be able to then go, oh, hey, something's going to shift if and when I retire. How do I make sure those don't lapse, or if I need something specific on that side? This is where we begin to ask those questions in that kind of pillar side. The health insurance, we're going to talk about Medicare, and it's going to be awesome on long-term care. You'll hear those two for sure. The retirement sides, the fiduciaries, the portfolio management, there's a wonderful risk assessment that we have individuals be able to do that takes like 5 minutes, and it helps you be able to kind of see where you land on the risk factor of being able to say, oh boy, I want it, all in aggressive accounts and make as much as possible as fast as possible with the potential of loss, or I want it to be safe. I want it to be something that I can use throughout my lifetime. And then the long-term strategies, again, Social Security, we're going to pick up that subject if there's any questions on that side, the Medicare side, and then also talking about long-term care. But these are just, again, bullets on the side of what we offer and allow you to be able to see kind of the power of SUA saying we want to partner with this specific organization called American Senior Benefits and what they can bring to the table to those that are valued members. Here's our kind of where ASB, we call ourselves ASB, all right, can help their valued SUA members. And so we're going to key on this in the next couple of minutes and even open it up to discussion. And Joy and I work in that space where Medicare comes into play. And most of you are on a group insurance, okay? And maybe it's a PPO and it's HMO, and there may be co-pays, and there may be specific deductibles and so on. And we help individuals go through the process of looking at how can I make that transition into Medicare seamless and to navigate it as best as possible. And so has anybody entered into the retirement bill at 65 and older? All right, yeah, I don't want to assume anything. That's right. And so again, you may have group insurance and then you entered into Medicare and may only have Part A because you have full health insurance, comprehensive health insurance coverage still with SUA. And so when that moves into the direction to where that may not be an option, then Part B comes into play. And I would assume you're on group insurance and you have Part A or no?
A and B.
You have A and B. All right, fantastic. And so when you have Part A and Part B, you are in what's called original Medicare. All right, and that's the government's way of being able to provide health insurance that does have some gaps. And so for the next couple of minutes, if we want to take some questions on that, Joy works in this space, I work in it, and be glad to kind of discuss that with you on original Medicare and just briefly on the side of your options to make sure those gaps are covered. Does that make sense? All right, so any questions that we have on that side? Anything that comes to mind? You're on A and B, right? So you're in original Medicare. Are you on an individual plan like a supplement or an advantage plan? Mutual of Omaha. All right, fantastic. One of our carriers. Great carrier. And I think for those that haven't entered into that as of yet, he mentioned Mutual of Omaha. I'm assuming that's a Medicare supplement. Okay, is it a Plan F or a Plan G, or do you know what plan it is?
I chose the higher deductible. I don't know the.
Oh, okay, sure. Yeah, so you're healthy and hoping nothing would happen, and chose a lower premium with a high deductible, right? Some options. It's a good one. Yeah, so Joy, come on up. Give Joy a hand as she comes on up here. Come on.
Good morning, everyone. Good morning.
She basically, and myself, work in this space and can answer any questions, but if you want to, do you want me to pull that up and do the kind of the Medicare supplement or the Advantage plan, or you want to just talk about it and see kind of how it goes?
So does anyone in the room have a Medicare Advantage plan? 1, 2, 3, 4.
All right.
Is everyone happy with how those Advantage plan works, or are you dissatisfied? They're not for everybody. They work great for certain individuals, and other individuals prefer original Medicare. Everyone's situation is completely different. There is no one cookie cutter plan for everyone. It's based on your individual need in health.
Yeah. So 2 different options are in this room that you have. So a Medicare supplement is federally regulated. So let's just say it's a Plan G or a Plan F or a Plan N. It's a plan. And you pay in advance a premium for that Medicare supplement that gives you the privilege of having no networks, no copays, no bills. It is medically related only. So it doesn't come with some of the frills that Advantage plans have that we'll talk about in a moment. But we want you to know that they're federally regulated. So a Plan G is a Plan G with Mutual of Omaha, Blue Cross Blue Shield, Aetna, Humana, whoever that carrier may be. And one of the challenges is that they're federally regulated with medical coverage, but their premiums can be different. And that means that Mutual of Omaha may be, let's just say, $135 a month. But Blue Cross is $146. Aetna's $131. We've got other carriers that may be lower and maybe even higher. And so we try to look at that and say, is, let's just say in this case, Mutual of Omaha, the best position for cost savings for the exact same plan across the board, no matter who's offering it. You can go in with that card, all 50 states, any doctor, any hospital that takes Medicare, you're in. No questions. That gives you the power, right? Part A and Part B, original Medicare, red, white, and blue card. And then that supplement comes in to fill that 20% gap that Medicare, original Medicare, does not cover, right? That's your first option, and you've got to pull in, you've got a Part D prescription plan, I'm assuming, correct?
Yes.
Okay. So, that's right. Oh, I'm not putting you on the spot, but I'm just usually what happens is that you, in the supplements, they do not cover Part D prescription plans. So you have to have a private carrier represent you with a Part D prescription plan, and that runs anywhere from, let's just say, $10 a month to $80 a month. And again, those swings are very real, and it doesn't mean the $80 is a better plan than the $10 or $15 or $20 plan is. It just means we're able to sit down, pull all those medications together, and make sure you're in the most cost-effective and then reasonable and reliable coverage for that Part D. So you've got the Medicare supplement, that's your one option, with a Part D, so you're covered with prescriptions. And then 4 of you, I think, raised your hand and said, we're in an Advantage plan. Advantage plans, they have 2 networks, PPO, HMO. They're both solid networks. I don't try to devalue one or the other. Just like Joy mentioned, it's very important that each person's unique, and then we look and be able to say which one would best fit and make sure the doctors, the hospitals, all of those players in your life are in that network if that's important to you, so that you don't get snagged on a phone call, just calling Blue Cross and they put you in a plan and you think it's right and you find out your doctors are not in the network. That's a tragedy that can happen when you're not informed or educated and sitting down, in a sense, with someone that would be kind of like us, brokers that work in that space and really help clients position themselves in the best way. Usually, it's how much is the premium every month for the most part? It's like zero. It is zero. Many of the plans, 85% of them are. And then that comes with some perks. So you still have co-pays, kind of what you're experiencing with your present. Let's just say if you were in group insurance with SUA, co-pays, there's a small deductible, but then they throw in some dental, some vision, some hearing. They throw in little stipends every 3 months for you to spend, maybe $30 or $50 or $100 every 3 months, that you can buy things but not have to pay for them because they're giving you a certain benefit for that. That's your Advantage plan, okay? And that's A and B, original Medicare, and then you're combining Part D, so it comes with a prescription plan.
So I think in my case, and probably all of us here, we get the dental from the state. We get Delta Dental
You get Delta Dental.
from the retirement system.
Good deal. All right. Now, any questions you have for Joy and I on the Medicare piece here? Anything you want to say too on the Medicare side? You're feeling okay? So just think about that, all right? So definitely be able to talk to us about, hey, checking out your specific plan or what you may be in. Yeah, hand up.
Well, I think at least relative to our particular household, we wanted Medicare Advantage, and we can, from our perspective, one of the things we're concerned about is that if we were to go traditional, there's all this uncertainty, and how do we kind of address that uncertainty relative to the Medicare choice?
You want to
So
speak?
if you were to take original Medicare versus your Advantage plan, you would pay a monthly premium based on male or female and based on smoker or non-smoker. You would have no network. On original Medicare, you could go anywhere you want in the United States, as long as the doctor, the hospital, the facility, as long as that doctor, hospital, facility accepts Medicare, you have no copays. You have an annual deductible. For 2025, it's $257. You pay the first $257 out of pocket, and then you go anywhere you want with no copays. That's the biggest benefit of having original Medicare, is someone who's worried about network. Does that answer your question?
Yeah, so what's a typical price range for someone making a choice, a change from Medicare to
It depends upon the carrier, it depends upon age, male, female, and that's something we do. We come and sit down with you, give you a free consultation and quotes, and answer any questions that you have. That's the benefit of being a broker. I could shop all the options and see what is the best fit for you.
And I've been, at least there's a perception out there that you could potentially get denied by a Medicare carrier.
You can, and that's another benefit of working with a broker. We have more than one or two options. We have lots of options. So,
And if I can,
I taught the state client, of course, the established terminal. Thank the usual out there. And state client was just a wild looking horse. And then, but then you swap out.
Or a minute. So you just mentioned something that's so important, so they're at least shot. So say Farm offers a Medicare supplement. The best supplement, that's the same, or your use
Neil,
meal would be $175 a month. And then he goes to which of Omaha, it's $130. Well, that's significant enough savings to where that's going to save him money per year. Sometimes it's even more than that if you've been in the Medicare system for a period of time. But just know, Joy is right on track on the side of that zip code, your date of birth, some of the aspects of health eligibility. So when you go beyond 65, or if you continue to work and it's your first time in Medicare, that's guaranteed. There'll be no health questions. All right, that's a helpful thing to know. The
aspects of moving then into 66, 67, 68, 69, and you have certain health conditions that happen, now it becomes a challenge on eligibility. And if a carrier asks those questions, and let's just say you had a TIA, and then you're a diabetic, but you're on 2 or 3 insulins and you're on 2 high blood pressure medications, suddenly that can begin to be a challenge to make a shift out of Mutual of Omaha into potentially another carrier that may be cost savings in the exact same plan, but they're asking health questions for you to be eligible for that plan. In the Advantage plans, there's no health questions. And I want to mention that on the side. You mentioned kind of cost. If it's a zero premium, that may be great, okay? And if you have a significant event, every Advantage plan has a maximum out of pocket, right? It's not talked about on the commercials, right? But usually anywhere from, say, $2,500 to $6,500 a year for a 1-year contract is a person's maximum out of pocket. So if you're hospitalized, if you go through a knee replacement, if you have some kind of a surgical spine surgery, or even something very severe, and the bill's $500,000, okay, you're having a stroke until you find out how much am I going to have to pay, right? And so the challenge is that maximum out of pocket comes into play. And let's just say if it is $4,000, you'll hit $4,000, and that $496,000 is paid by Medicare and the Advantage plan carrier. So the perception sometimes is you're going to get in trouble with Advantage plans, but all of them have a maximum out of pocket. They have co-pays. 70 to 80% of those in Advantage plans never hit that maximum out of pocket because it's only smaller percentages you're paying for major tests or a hospital stay and so on. So we try not to favor one or the other, but you're seeing both of them as a powerful choice. One, no networks, travel all 50 states, go anywhere, wherever there's Medicare, which is 99.7% of hospitals and doctors. You pay in advance for that, and then the premium is based on your age and zip code and so on. The Advantage plan, no health questions, and you can choose the best one in the PPO or HMO, and which whatever fits for you. We'll be glad to sit down on that side, okay? Very helpful in that. If you're in a supplement, the dental and vision sometimes comes into play that may not be covered, some of the ancillary coverages that we work with that really come alongside and help making sure the client has peace of mind in those specific areas. Fair? We did it. Medicare.
They talk about the TRAIL program for the Illinois employees.
You talk about
TRAIL, T-R-A-I-L,
Yep.
which is, the IL is for Illinois. But then you're talking about Medicare supplement from other companies. So the TRAIL program, every 5 years, they do a contract. It used to be United Health, now it's Aetna.
Yeah.
But you're talking about Medicare Advantage other than TRAIL.
Absolutely.
Correct.
Yeah, because you have to, you compare. So you put Trail on the grid, and let's just say put Humana, Blue Cross, Aetna on the grid too, and then look at which one has the greater benefits for the client. And that's what's helpful for you to know. And sometimes there's pressure, say, oh, well, if you get off of this one, you're not going to be able to do this, or, oh, if you get off, it may not be the right thing to do. And that at times isn't always the case. So you have to understand that, boy, oh boy, this could be a great shift for me in the event that it's cost savings and it still has comprehensive health insurance coverage. Great question. Great question. Yeah, we'll shift here if we can on the side of moving into long-term care. I mean, that's what it says out front and so on. We're going to put up, it's a little different presentation, but pretty easy to pull up here. And I'll do the presentation here, and that'll be your slides too. We'll go through that together. Is that okay? Yeah. Yeah, so this is really, really important, okay? 91%. Now think of this for a minute. 91%, one or both individuals that are 65 and older will have a long-term extended care life-changing event. I don't mean to say that to put any pressure on. I'm just saying that's the reality as we're living older. 91%. So this is a subject that at times is very touchy in the midst of, can I afford it? Or can my portfolio that I've worked so hard on be able to handle something of this nature to put in place in the event that happens to me or that happens to a significant other person in your life? So Joy works in this space, I work in this space, and this is kind of helpful for you to see on the side of anything that's cognitive, anything that's physical, anything that is impairment that's beyond Medicare's ability to cover. Medicare will cover when people are recovering. When there's an event that is degenerative or descending into, again, no recovery, now we're talking about long-term care, extended care. We're talking about using funds that people have in their 401ks, in their IRAs, in their savings and checking, and then you begin to spend down. That becomes an expense, okay, for the individual and can become a very, very serious challenge for them. You want to hit this down here because that's kind of what we're, why plan for it?
Why we're planning for long-term care? Long-term care, the need for it is the number one reason individuals go bankrupt. The cost of long-term care are going to deplete your assets so quickly. It's heartbreaking to see what people have to go through and give up. So it's very near and dear to my heart and important that individuals have some kind of plan in place. Something is better than nothing. A little bit of help, right, will help you avoid losing, depleting all of your assets. Vital part of financial and retirement and estate planning is often overlooked by a risk management. Financial advisors, I have found some of them are very open to and work with me on long-term care planning because they see the need. Maybe they've lived through it with a family member or know someone dear to them. Other financial advisors are not so open to it because they don't want you to move that money out from underneath them, right? So you got to think about what's best for you. It poses the greatest threat to financial security due to high cost of extended care. Has anyone here experienced a family member needing long-term care? Usually a parent. It's devastating.
If I can share just briefly here. My father and mother were married 29 years and second marriages for both of them. And my father went through triple bypass, but then we saw his cognitive mindset begin to decrease. And it was diagnosed a little later as Alzheimer's dementia. My mom made a step out of the marriage, didn't understand because it was such a volatile type of Alzheimer's that it was very difficult to kind of manage. And that took me into 10 years of being his power of attorney and working through all of the assets. And he had been a very successful person. Very proud of my dad. But they had to make a decision because in that specific plan they had long-term care, the premiums were increasing. It's a traditional long-term care policy. And they decided that they didn't need it. And they stepped out of it. And I'm here to tell you, it is a very serious step for not only the one going through the sickness, not understanding, and then the ones that are closest to them, and then the family that has to make the determining decisions. And this is why it's so important. That whole spend down, that whole Medicaid, all of it happened. And it happened then with my mom. So she had it for about 3 years prior to her passing away. And, you know, I was involved in both sides of that. And so Joy and I have a very passionate empathy for individuals that have situations that happen. Sometimes long-term care can be 2 years, 1 year, you recover. And then it kicks in again if there's an event 3-4 years later. And it's there, right, for you, depending on the type of policy that you use. So I share that just in reference to a life-changing event can change the course of anyone's financial planning. And it can really, I don't want to say in a sense do damage, but with improper planning and not having in this place, it really changes the dynamic of finding joy and contentment when everything's being taken. And that's a tough thing to go through. So I put that in there just on the side of the personal strains down here, the consequences. I live this. The financial disruption and the tax implications and relinquishing businesses and selling homes and moving that kind of a direction and, you know, having parents live with me. Yes, it's a shift, right? And then that impact, it really is a consequence to even those that were caregiving. I was caregiving for my dad and then had to decide, it just breaks me up, okay, because I've lived it. And so it's something that is very serious to look at in the midst of portfolios and in the midst of this time in your life. Be very, very prepared to move into this in a way that we could potentially help you. And that's what I'd like to say on that story. Anything else, sir? There's a couple of types of long-term care policies. And this is fantastic because in our age, looking back 10, 15, 20 years ago, these were not on the table. It was just a standard traditional long-term care insurance policy. And you want to share a little bit on that?
There's traditional long-term care policies that actually I'm not a big fan of. You pay a big premium, you never go on claim, all that premium money's gone. And that's what most individuals relate to when they hear about long-term care insurance. Oh, it's very expensive and my mother never used it. They have evolved over the years. There are hybrid life insurance plans where you could, for instance, pay over 5 years or pay over 10 years, or if you're able to move a lump sum, right? Now that, let's call it $100,000 lump sum you've invested in this life insurance policy, you go on claim the next day, it could pay out, for instance, a $320,000 benefit, depending on age and how long you buy the policy for. And there's a lot of depends here, but they're custom-built plans. You build them to your individual need. However, if you never go on claim, your money is a death benefit to your beneficiary. So there's no loss in premium. There's other types of long-term care that are annuity-based, where if somebody wouldn't qualify for a hybrid policy due to age or health, there are policies out there that have a rider on an annuity.
Yeah. So she's given you two options here, really, or three. The traditional long-term care is an option to look at. It really is, but it does have certain limitations that we let you know of. And we want to let you know in advance so you know what you're walking into. And that may be a fit for you. But these hybrid, in the chassis, you kind of think of the car that you're driving. There's one that's life insurance, and it can double or triple the income available for nursing home, for long-term care needs. It can be absolutely crucial to where a person may have, let's just say they have $2 million in assets. Fantastic, great. The advisor may say, keep it all in the market, we'll make sure it all stays safe and so on, and you'll pull income and stuff. When an event occurs, that can really go downward quickly, and especially if there's any market downturn, of which usually those 65 and older do not like any risk factor, all right? I'm just telling you. So we usually use a portion just based upon suitability and saying, okay, if we were to take 100 or 200 or 300 or 500,000 and put it in this type of a product that still grows but does not have market loss. Gains are added as it matures, and then an event occurs. Well, let's just say that's a $300,000 policy. Now it turns to 600. It doubles. That can still really help an individual or couple on the side of saying, oh my gosh, even though we have $1 million over here that's liquid and still, it isn't draining one bucket. The bucket is now magnifying the benefit, and you can use that in place of using the other. And then your what? Legacy continues, even in the midst of a serious life event. So those are three options, that life insurance policy or an annuity. Incredible carriers and the products that are available for us to be able to kind of look at your specific needs, what you're trying to accomplish, and going, what would best fit in this situation? And again, think of it, even if not using it, that death benefit's intact. It's there. It's a wonderful thing. It's not, lose it principle on the top side. Put a lot of money into it, and it's like car insurance, never get in an accident, they don't pay you back.
Yeah.
Right? So, our screen went off. There you go. So just know those are the options, and we wanted to allow a little time to ask some questions to kind of pique interest, and if we can, On this side of life, have we given you some solid information, and do you have any questions that could bring some clarity?
What is the range of cost on a monthly basis of long-term care?
What are the range of
Costs.
for long-term care? All right, so it depends on, this is some of the options. So let's just say you go with a one lump sum, right? One time. So then they break it down.
Are you talking about the insurance policy?
Yeah.
Okay, first of all, we can get into that, but if someone is in long-term care, what is the cost of paying the facility?
Oh,
on a
sure.
monthly basis?
Absolutely. Okay, so, right. So knowing this, in my experience, any type of an assisted care facility, even independent is a different field, but independent can be, in this territory, probably $8,000 to $10,000 a month. It's a very serious commitment. That's independent. Assisted means that you're going to have assistance. So that may be with walking, that may be 24/7 care, that may be nurses, and that begins to be more, right? So you have a significant amount of monies being pulled every single month in that pool that gets drained. So that doubler helps. It may not cover everything. Even a one-time traditional long-term care, you pay $10,000 a year and you get a benefit of $5,000 a month for 3.5 years. Well, the average is between 3.5 to 6 years. People will need some type of long-term care throughout their life of that extent. So that's an option. So then you're paying for it, but then you're allowing, if that's $5,000 a month and you need another $5,000, okay, now here it comes from that other pot, that other bucket that's your managed money or another annuity that's giving you income. Wonderful, but it doesn't drain it as fast. See, you're trying not to drain funds quickly so that you're in a spend down mode, and then you're going into a very serious side of not having choices. In these policies, for the most part, you have choices for home health care, you have choices for assisted care, and then those that are, again, Renaissance or something that is, again, full-time, depending on that specific need of that specific person. Sometimes these companies give you a check of which then you pay the bills, and then others say, oh, we want the invoices, and then they pay out of those invoices, and then they say this is what you're responsible for. So they're set up a little differently, but I hope that kind of helps you on this side. Up in where we're, Batavia and Geneva and kind of the northwest suburbs of Chicago, that cost is more expensive. It just is. It's remarkable on the side of the cost as people are living longer and they're firing up more assisted living or senior communities. And I'm in them all the time. I get the opportunity to be able to entertain and sing and then also do seminars like this. So I see the cost. But I hope that helps you on this side of know that that's
Well, it gives us all an idea of what we're insuring against.
Yeah,
Okay?
yeah.
So then are there any, I know you have different policy options
Yeah.
that people can be informed about. Are there any policy options that someone could buy that would cover the entire cost of a monthly basis?
Yeah. So again, it's based upon the amount of monies a person has in their pool, right? And then we look at it and say, okay, if we count on $8,000 a month going towards long-term care, what does the number have to be for the life insurance or for the annuity chassis to where then that spits out, when that event occurs, a doubling factor. So we can look at it on the side of covering the cost potentially or potentially trying to even go beyond that, because at times you're wanting some extra monies to be able to play with when that long-term care event occurs.
Also,
Is that helpful?
SUA members are eligible for a discount on policies as well. Some long-term care policies, you could receive a discount because you're a SUA member. Another benefit would be if you're pulling a lot of your managed money out to self-fund long-term care, you're getting hit with tax implications. If you have a policy in place, it's a tax-free benefit. and you're not getting hit with those tax implications.
Does that make sense to you? Understand that? You pull from an IRA that's tax deferred, and that's your cost. You're paying taxes for whatever you're pulling out, if something is in place to handle that. Makes sense? Any other great question in the back? Hope that was helpful. Yeah.
Maybe kind of following up on that, can you roll over money, say, from like a 403B into one of these long-term?
100%.
Without tax implications. So they're not like saying, if you roll it over, you need to pay your taxes. You can roll it over, it's qualified to qualified funds, and it's a pretty simple process, and we do that through transfer forms, and at times we call the carrier with you, or carriers talk to each other, and then monies is transferred and wired, and it's there. That help you?
And then when it says advanced planning, what's the typical age that people are starting this based on your experience?
I usually am meeting with somebody who is 64 years old or older, but I do have clients who have started planning in their 50s. As I said, you could put in a lump sum over the next 10 years, and it's not so hurtful that way.
Is it cheaper if you plan earlier?
Yes.
More cost?
We said that together. And again, we work with clients that are 70 to 80. So just know it's not limiting on the side of, if you're looking at a chassis that's an annuity, then that rider is extremely important. If it's a fixed indexed or a fixed annuity, you've got to be able to have that rider that then, when that event occurs, it has potentially a doubling factor of whatever's in that annuity accumulation value. That's huge on that side. So that there are carriers that have clients that are older, that at times the assumption is, I can't be covered because it's so expensive. And yet that would be what that second one is, asset-based. All right, if a person wants to do it payment-wise, that's an option. But many times that one-time immediate issued policy of coverage really helps that person, because things can happen 6 months, 3 months, 9 months, a year later, and it's like, whoa. We are so glad we sat down and did the pre-planning.
Absolutely, and it's not just for financial, it's for the family. I'm living it right now with my mother-in-law, and we all have to take turns taking care of Mom. You know, because not one of us can quit our job to full-time take care of Mom. The saying is, Mom raised 4 daughters, but 4 daughters can't take care of one mom. It's a way of life.
What happens if, let's say somebody had a stroke, and they went into long-term care for a period of time, but they recovered. My mother had a stroke and then fully recovered.
Mm-hmm.
Sure.
So she goes back home. What implications is an experience like that for the plan?
Right, then what happens is the long-term care turns off. It's kind of like an on-off switch, and then that policy continues, whether they're paying into it or whether it was a one lump sum and then they've used a certain portion of it. So when it's turned on again, if there's another, let's just say it's a heart attack and takes the person down in some way, or they fell in the driveway, broke a hip, and it's not replaceable. Now we're in a scenario that can be more serious. So yes, it doesn't mean that it's gone. That's what I want to make sure. Some policies, you have to look at it and make sure and not assume that, oh, I'm going to be covered in 5 different events, kind of a thing. I want to make sure that when you sit down with us, if you're looking at that type of a policy, these are the ones we will favor. And then make sure there's options. If a person recovers, it turns off. And then suddenly another event, then it turns on again. I wanted to show this. This was something that you felt was really important too.
This is a powerful page. Yeah. 70% of people turning age 65 can expect to use some form of long-term care in their lives. This is by the Department of Health and Human Services, longtermcare.gov. Is this a touchscreen?
No, it doesn't.
Okay,
It's
so,
in presentation, but they see it.
okay, so.
I got it.
Yeah,
So the first box, imagine that's car insurance. One of the first ones, if your home is caught on fire. 1 out of 1,200 people experience this. Do we have homeowners insurance? Yes. All right. The second one is car insurance. And that one moves up the ranks. I think it looks like it's 5 out of 1,200 total their car. Do we have car insurance? Yeah. All right. The third one is the odds of being hospitalized. See all the red dots in there? Well, that one's about close to 200 out of 1,200 that at some point in their life they'll be hospitalized. You see that last quadrant? That's where that 70% comes in. 725 out of 1,200 will experience a long-term event.
it's eye-opening.
I just go, it's not an easy thing for people to see. And so we want you to see the power and the value of what it brings to you in reference to peace of mind. The people that you're with that love you. Just sat with a client that's husband and wife, and he has assets. He's done well in his life, but he said, I've got to put something in for my wife. She doesn't have anything, and she was about 10 years younger, and certainly did it. And you could almost see his shoulders, like a deep breath, and then she was going, I feel so valued, even though I'm healthy right now. You're thinking about my future in the midst of potentially you not even being here, and I will be covered. It's incredible, the peace of mind that it brings in reference to all of these that we offer. When Medicare comes into a person's life and they see the cost, at times it's such a tremendous help to them that they feel as though it's not as much of an out-of-pocket expense as what they were using in the independent health care or even at times the group plans. When we move into life insurance and we review life insurance for folks, sometimes they haven't seen a policy for 20 years. They don't even know what they have. And it's like, it's not that difficult. There's no heavy pressure. We take a look at it and review it and say, you know what, this looks good. Stay current, right? We're not trying to okay, we got to do something. But boy, sometimes you look at life policy and it's like there's a huge amount of cash value. Oh, it's paid up. Suddenly they've got an option and they health qualify and they can take a $50,000 policy and make it $70,000 and it's still paid up, but they just put $20,000 more in their pocket. It's like, what? I didn't know that was even possible. So that's a simple way for us on this side to sit down and say, hey, this is a fact-finding mission that we love getting together with folks, being able to get to know their stories, your story, and be able to help you in any way possible to be able to put things in place to where you feel very, very peaceful on the side of, in the midst of an unsteady world, right? A lot of unsteadiness. Both of us have met with enough individuals to where if they're 60, 65 or so, they do not want to hear it will come back. See, when the market does this, it will come back. And I'm just telling you, there's ways to where our fiduciaries work with clients, with us, with these long-term care policies, whether they may be annuities, whether they're life insurance chassis, and those coverages help people be able to have the peace of mind to know that it's not going to be lost. It's safe, it's able to grow, and be able to be distributed in a way that would be helpful for them in the long-term game. So any questions on the long-term side? I think that kind of moved us in. Yeah, we don't need to go through that. I'll pop this one up. Just wanted to, let's see, current slide. There is a little form inside of the folder, and we would appreciate it so much just to kind of be evaluated on our side, and if it's been profitable for you, educational, informative. And then it also gives you the ability to work with us, to fill it out. And that's basically a form that will be able to contact you. And you may say, hey, I want Social Security strategies. I haven't started taking Social Security, or I'm already taking Social Security. Great, that's a quadrant that we would put into the mix. That's not going to be changing other than potentially a little COLA, cost of living adjustment. And it may not be much, but it's there. And then also looking at everything else that's in the pool of buckets that you may have. So you can check those off, and we'll be glad to follow up with you. We travel, we do Zoom, we do Microsoft Teams, we do Google Meetups, we do calls. At times, depending on the people that, their comfortability. We do like sitting down with folks, and there's no cost. When you offer a cup of coffee to us, we'll probably say yes. And if there's, something else on the table, well, fantastic. But this is very helpful if you take a few minutes. Any questions, as we're kind of coming to the close of the session here, that you might have for us? Oh, you're doing okay. All right. Well, hey, fill that out for us if you wouldn't mind just giving that to us as you leave, if that would be something you'd want to do. And believe me, there's no pressure. We're not trying to put you on a list and get called 16 times a week and so on. We really do appreciate